In this video, I'm going to be going through a cash book worked example. So what I have here is a question, and the question is for the month of January. We have transactions stemming from the 1st of January to the 26th of January. We can see the amounts. We can see what each of the transactions relate to. The Alice rule still does apply. So we still need to remember the Alice rule. So every single one transaction leads to the creation of two ledger accounts. One account is debited, the other one is credited. Now, in the previous video, I explained that the cash book serves two purposes. The cash book acts as a ledger account. So therefore, the cash book will record one half of the entries that relate to either cash or bank. So it could relate to money coming into the business. So on the debit side, that's the increasing side. That will record money in or receipt of money. That's another term. And on the credit side, what you'll find, which is over here, any monies you're paying out, so this is for payments, it will cause a reduction in either cash in the till or your cash at the bank. So any payments cause a reduction in cash in the till or cash at the bank. The money in section, it will cause an increase in cash in your till or cash in the business place or cash in the bank of the business. So let us start going through these transactions to see how the cash book is prepared. So the first transaction, January the 1st, balances brought down cash for 400, which is on the debit, and bank 2,000, which is also on the debit. What this is actually saying, that these are transactions coming from the previous accounting period. So as the date is the 1st of January, this would suggest that these are coming from December 31st for the previous year. So as you will see here, January 1, details, information is written, balance brought down, because that's what it says here. And it says cash 400. So you're going to be going to the cash column to record the amount and the bank column to record the amount. Now, students sometimes ask, do I put the discounts and cash and bank in a particular order? There's no real particular order. You could have written cash, then bank, then discounts. You could have written bank, then cash, then discounts. So there's no real order. You choose a style, which is going to be you will remember. I tend to put my discounts first and then cash and bank. So we can see from January 1, the opening balances. Balance brought down from the previous period, 400 in cash, 2,000 in the bank. Let us move on to the second transaction. So on January 2, it says, bought motor expenses by check. Now, when you read that transaction, it is telling us that there are two accounts. So every one transaction would affect two accounts. So the motor expense account would have to be created. And later on, I'll show you where this is created. This will go into the general ledger. So in the general ledger, you'll see a motor expense account with the other half of this transaction. So the cash book only holds one half of the double entry. And it says you're making payment by check. So this will affect the bank column. And as it is a payment, it will be recorded on the payment side. So if you look here, you can see the entry, January 2, motor expense, and you can see the amount, which is 200. Now, I usually remind students to make sure that as you're going through, try to identify where the other half of the entry is going to be. And you can do that by making a little notation in the cash book next to it. So I normally would say put a little GL. So I would put GL right here. Just bear with me. Just trying to get my pen to work. Okay. Don't know. My pen isn't working. Right. Okay, it's just started to work again. My apologies for that. Okay, so let me just erase my scribble and then I can continue to work. So GL, I'd put a GL right next to it. And what I'm doing is to tag this to say where the other half is going to be. And also it is a reminder of the ledger in which the corresponding account will be found. So what I'm actually saying is that the corresponding motor expense account will be found in the general ledger. Next transaction, January 3rd, it says P. Piper loaned us 1,000 paying by check. So if the business is going to be receiving money from Piper, it's going to increase the amount of money that we have in the bank. And Piper is paying us that money via check. So let us come over here. We are receiving money, so it's going to be on the money inside of the cash book. January 3, P. Piper. And in brackets, I put the word loan as a reminder of what type of transaction this was or this is. And because it says that we are paying by check, you can see here, it goes into the bank column for 1,000. Again, I would make a little notation to myself as a reminder about this transaction. So P. Piper loan, that's going to be in the general ledger. Next transaction, January 5th, it says paid rent by cash. So right away, the word paid suggests it's going to be on the payment side of the cash book, and we're paying rent. We're paying it by cash, so this will affect the cash column on the payment side. And if you look here, January 5, we write what we're paying. We're paying rent, and we're paying it by cash. But this is only one half of the double entry. So the other half will be found, and I just make note of that again in the rent account in the general ledger. So if I go to the general ledger, I should see the rent account for the other half of that entry. January 15, it says received a check 1,000 from Farhan, who is a trade receivable. So now we are receiving money after he deducted 100 discount. So Farhan, who is a credit customer, is going to pay 1,000 to us in a check, but he's sending this check after he took out 100. So it simply means that the debt is 1,100. And if we come over here, we're receiving money on the receipt side. This is the use for the discount allowed column, because while the customer is paying us £1,000, we can record or keep a tally or keep a log of all of the discounts that we are allowing or giving to our customers. So in this instance, we are giving Farhan £100 as discount. It goes next to his name in the same row, right next to where you're recording that you received that £1,000. So the date, January 15, who you're receiving the money from, which is Farhan, the amount of discount that we are giving to Farhan as a business, and the amount that we are receiving from Farhan in terms of the check. So Farhan has decided to pay early, so he's benefiting from a settlement discount or discount allowed. As I said earlier, I like to tag my transactions because it gives me an idea about where I'm going to go next for the other half of the entry, because every one debit transaction has a corresponding credit. So the corresponding credit will be found in the sales ledger. Why? Because Farhan is a trade receivable, and all trade receivable accounts are found in the sales ledger. So I'm just tagging it here because that's where I'm going to go look for the other half of the entry. Remember, the cash book acts as a ledger account for cash and a ledger account for bank, as well as a book of prime entry. Next transaction, January 20th, it says cash drawings. Now the word drawings is suggesting that the owner is taking out money from the business. So the owner is withdrawing £10 and they're taking it in the form of cash. So it's a withdrawal, it is a payment. It's going to cause a reduction in cash. So in the cash column, on the payment side, you should see the £10. So January 20 drawings and the owner is taking out £10. Again, I would also make note of this to tag this. Where would the next half of this transaction be found? It's going to be found in the general ledger. So I should see this in the drawings account in the general ledger. January 24th, it says we paid 200 check to a supplier. So in this instance, the business is going to make a payment. 200 check to a supplier, our law, after receiving £10 discount. So we're doing this after we receive this discount. So the check is for 200. The £10 is discount. It's discount that we're receiving. So because we're making a payment, it's going to go on the payment side of the cash book. January 24th, who are we paying? Our law. And remember that our law is a trade payable, as it says in the question. We're receiving £10 discount. So alongside the amount that we're paying, we're keeping a tally or a log of all of the discounts that we're receiving. So we're receiving a £10 discount from law. So I'm hoping that this is clear. And the last transaction, which is January 26, received commission £100 by check. So commission is, some businesses will operate on behalf of another business. They could receive commission in various forms for various services that they render. And so this becomes an income. So it's recorded as other income. So income received is going to be recorded. It's money coming into the business and we're receiving it by check. So if you look at January 26, commission received, and because we're receiving it by check, it's in the bank column. Now, just to tag our transaction, so I'll go back to law because I did not tag law. Law is trade payable, so law's account should be found. The other half of that should be found in the purchases ledger as a trade payable, and commission received will be found in the general ledger. The next step would be to balance off the ledger accounts. These are balanced off in the very same way. So balance off the cash book, it's balanced off very similar to the ledger accounts. So let us start off with the discounts column. The discounts column is just a total. So you just total the discount allowed and you'd keep a total for your discount received. So discount allowed total, discount received total. There's no balancing off because you need to then create the debits and credits. So on their own, you will then have to create your debits and credits for these. Okay? And I'll show you how this is done in a few minutes. The cash column, when I look at the debit side for the cash column, it shows that the total is 400. So the debit side for cash is 400. When I check the credit side, it was 210. So 200, which I received for rent, which I paid for rent, and the drawings for 10. Subtracting that from 400, that leaves me with 190. So therefore my balance CD is 190. So at the end of the month, to make both sides equal, I'd put 190 on the credit side. So when I add 190 plus 10 plus 200, it will now give both sides the same for the cash column, 400. But then I need to transfer the total to the opposite side as my balance brought down to the first of the month. So February 1, balance brought down 190. The bank column is balanced off in a similar way. the debit side, when I add all of these up, so 2,000 plus 1,000 plus 1,000 plus 100, that gives me 4,100. On the credit side, there's only one entry, so on the payment side, one entry as it relates to, two entries here in the bank column. So motor expense for 200, which we paid, and our law, which we paid 200, which is £400. So 400 from 4,001 leaves us with a balance of 3,007. You put the balance on the side with the smallest total. So the smaller of the two, so smaller total, when I add the smaller total, which was 400 plus the balance of 3,700, it will make both sides equal. So now both sides are saying the same. I now need to transfer this 3,700 to the opposite side at the first of the month, calling it balance brought down. So what this actually means is that after the end of January, so during the month of January, we received the money in, we paid money out, and what we have left, 190 in the cash till and 3,700 in the bank. Now I must make you aware that the bank column could also have a balance brought down, and I'll just get my pen for this one. So the bank column could also have a balance brought down on the credit side. So just in case this wasn't shown, so let me cross that out. What if up here, when I added these two columns, so I had a motor expense for a larger amount. Let me say that I had a motor expense for 8,200. So this is 8,400. And the debit side was 4,100 when I add it up. It means I would have a balance, but the balance would end up on the debit side. So I'm ignoring what we have here. I'm just adjusting the question for you to see what could have happened. So if the debit side, the DR side, and let me just get a different pen. So if my DR side was 4,100 and the CR side worked out to be 8,400, the balance, and I'm just shortening it, the balance would end up to be 4,300. So this is the smaller of the two. I would take the balance and put it on the smaller side. So the smaller side would have been the debit side. So on the debit side, I'd have to put the smaller amount. And the smaller amount on the debit side is 4,003. So I'm getting rid of these. I'm just adjusting the question for you to see what could have happened instead. And what I would do is to have balance on the credit side, but I'd also have balance on the debit side. And I'm writing it in blue. So on the debit side, I'd have similar. January 31st. I would have balance, and I'm going to shorten it because I don't have enough space with a pen. Balance CD 4,003. So I could have two balances. One balance on the debit side for cash, but then also have a balance on the credit side for bank. Why? Because it's possible that we had a bank overdraft facility in place that would allow the business to spend more than they have in the bank. And so therefore the payment side would be larger than the receipt side or the money inside, which would result in a balance CD on the debit side. So therefore both sides when added together, that if I add 4,003 plus 100 plus 1,000 plus 1,000 plus 2,000, that will then give me 8,004. I'm just altering the same question, and on this side I would now have 8,004. I would have to bring the balance CD down to the opposite side over here. And so what I would have is February 1, balance brought down B/D, and the amount would be 4,003. Now this balance, which is here, 4,003, would be known, because it is on the credit side, would be called a bank overdraft. So the balance, which is here, would be a bank overdraft. Okay. So the 4,003 would be known as a bank overdraft, and it's called a bank overdraft because now the credit side is more, you're paying out more money. So just in case I've altered this, let us just say that the motor expense was 8,002 instead of 200, and all of the other transactions which were on the debit side remain the same. It will cause the payment side to be much more, and so therefore the difference between both sides would give us a balance CD on the debit side, which would then bring back down to the credit side. So you'd end up with a credit balance. So you'd have two balances, one on the debit side for cash, and the other would be on the credit side for bank. The balance on the credit side would be a bank overdraft. That's what it would be known as. And there are some questions that will actually show you that. You could also start off with one of your balance brought down at the 1st of January, being also, so you could have your cash here, but then you could also have a balance brought down on this side, but for the bank. No, bank can have an overdraft, but not cash. Cash should never have an overdraft. You can only spend what you have. Okay? So you can never have, so it's either a zero balance, where it means that you spent off all of your cash, or you have some which is left, which you'll see as a debit balance, but you can never have a credit balance for cash. Okay, so let us move on to look at the transfer of these entries. So remember, I annotated all of this and I showed you where all of these would go. So remember, we only did single entry in the cash book, but we now need to look at where the other half of each of these entries. So for Piper on the debit side, for Farhan and commission received. On the credit side, motor expense, rent, drawings, and law. And in addition to those, we also have to pay attention to these as well. So we must pay attention to, let me just try and get some other colors available. So I'm just going to get a red color here. Discount allowed and the totals for discount received, where do they go? So we're looking at these totals. Where do we put these totals as it relates to making entries in the ledger? So here we can see the prepared cash book. So I just went through this in detail with you, the prepared cash book. So now we're looking at the transfer of the transactions to the general ledger. So you can see it right here, highlighted, general ledger. So that's it. That's the general ledger. And all of these accounts which are coming up will be the double entry. So the other half. Now if we look clearly, motor expenses. So we'll start off with the payment side of the cash book. So motor expense here of 200. That was on the credit side. So if that is credited in the bank, the other half would have to be debited in the motor expense account. So you can see motor expense A/C, and you'll see here on the debit side the second of the first, bank, because that's where the entry was. You can either write bank or you could write cash book. P Piper, which is for the loan. Let us look here. We can see the entry for P Piper. So that's the entry for P Piper here, loan 1,000. So the ledger account, P Piper, which is a loan account, A/C, and the account is credited. So the entry was debited in the cash book. That's a debit. And so here is going to be credited. Rent account. Now, if you look on the payment side of the cash book, you'll see that we paid rent. And we paid it in cash. So now there's the rent account. You can see it on the debit side. So here we are crediting, down here we are debiting. The other one, or the entry, was drawings. Drawings was on the payment side of the cash book as well. I explained these on the previous page. So you could actually pause or go back to look at the previous slide to see what I discussed there. So here you can see drawings, payment of £10. This was credited, so it's on the payment side or the credit side. So just remember. So for those persons who might forget, this is the credit side. That's the reducing side. It's the payment side. This side is the debit side. That's the increasing side. So money in and money out. So money in side, and that is money outside. And so on the money outside, we can see drawings. Carrying on, we're going to look at commission received. So you can see here commission received, the 26, that was on the money inside of the cash book, which is the debit side. And again, that's the increasing side, which is money in. And the credit side is the decreasing side, which is suggesting money is coming out. So on January 26th, that was on the debit side of the cash book for 100, and it was a bank transaction. You can see it here. Other half on the opposite side of the commission received account. So I'll just put in account, and you'll see on the credit side the amount as shown. Okay. Now the two transactions which from the cash book which we need to pay attention to is the tallies or the totals of discount allowed and the total of discount received. We can see it here. So this 100, so discount allowed, is an expense. So this is something you need to remember. So discount allowed is an expense. So our expense of discount is increasing. So again, this is off, so I just need to get my pen working. Just bear with me. Yeah, so that's an expense. And discount received is income. So based on Alice rules, assets, liabilities, income, capital, and expenses, the expense here, as you progress through the financial year, the expense of discount allowed will get larger and larger and larger. So for the month of January, your total discount for the month that you're actually giving to your customers. So remember that discount allowed is the one that you give to customers. You allow to customers, your credit customers, because they pay early for their debt. So it means that this would be a debit entry. So on the debit side, you'll actually see the date, which is the end of the month, because it is a tally. So we're not recording individual transactions. And again, this would go to the general ledger. So it's all of these I'm discussing are entries for the general ledger. So at the end of the month, you just put a total figure for all of the discounts that you have allowed to your customer, and that is found in the cash book. So CB here means cash book. Total for the month from the cash book is 100, as shown here. Discount received, total for the month that we are receiving from our suppliers or trade payables, you're only putting one entry. So the books, remember, the books serve a specific purpose. Books of prime entry saves space. So where you write, where you make entries, you don't have to make multiple entries. You can make less entries. It saves time and it saves space. And this is just an example where from the discount received column, you're just recording that one transaction here. And see, January 31st, total for the month, £10. So we have gone through from the cash book, looking at those that went to the general ledger. So we knew, just bear with me a second, let me just get my pen again. So that was an entry for general ledger. Commission received was an entry for general ledger. Motor expense was an entry for general ledger. Rent was an entry for general ledger. And drawings was an entry for general ledger. Now we have two other entries that we have not yet looked at, and so we're going to be looking at that shortly. Now we're going to be focusing on the other two entries that we have not yet considered. So first, this one is for Farhan, who is a trade receivable, and the other one has to do with law. Now these are two different types of transactions because they relate to trade receivable and trade payables. So for law, who is a trade payable, let me just change my pen. So I'll just write TP. So law is a trade payable. The trade payable account, because they are suppliers, the trade payable account will be found in the purchases ledger. And the trade receivable account is going to be found in the sales ledger. So you will see this indicated here. So let us look at law first. So purchases ledger, as indicated here. Our law, who is a trade payable. And we can see both entries for law. So what we can see, it's the amount that we got from the check. So bank for 200, January 24th. But we also have to make an entry for the discount received. So the discount received account would have the other half of this entry. So the cash book only keeps a tally of the discounts, discount received. So this is not a debit or credit because the individual accounts would be debited and credited. The discount received account in the general ledger would have part of the total will be made up of this £10. And then in the individual trade payable account or supplier account, you will see the amount itemized. So January 24th, discount received £10 because that is the amount of discount we received from this specific supplier. On the other hand, trade payable. So on the debit side of the cash book, we can see our trade payable account. Trade receivable, my apologies there. On January 15, Farhan, trade receivable for 100 in discount and 1,000 from that was received and put into the bank. So a total of 1,100, but we allowed this customer £100 in discount because they are settling their account early. Now these two entries will have to be made in the customer's account to reflect that the debt was settled. So the debt has been paid by the customer. So if you look in the customer's account, Farhan, which is here, the entry in the cash book is on the debit side. So the customer account, the trade receivable is an asset. So what you're having here, the entry is going to go. So this is an asset account. So don't forget that. That's asset. and your asset is going down. You're reducing the debt. So the customer owes the business less money because they are making a payment of £1,000 and the business is actually granting them £100 as discount. So less is owed by the customer. So this is a typical, and so this comes to the end of me explaining and looking at an example, and this is a typical example of one of those cash book questions which you can actually do. And so it's best if you practice as many of these as possible so that you can get a better feel of what the cash book is and how to transfer entries from the cash book into the various ledger accounts. So the preparation of the cash book and then transferring those transactions on from the cash book into the respective ledger accounts. And I hope this video actually helped you in mastering that.